Alright, so second thing we need to do on one of these questions is look at these adjustments down here, okay, the additional information. So the first one we have here is to do with stocks. So working one, trading stock 116400. This is going to be in every sole trader question you see, okay? So closing stock, the trading of 116400. It's going to go in two places. So it's going to go on the profit and loss account, and it's going to go in the cost of sales up in the trading account, and it's also going to be a current asset. Okay, so that's always the adjustments you make for closing stock. Okay, so it goes in two places: profit and loss in the cost of sales up in the trading account, and it will always also be a current asset. All right, we've also got stock of stationery. Okay, so we have a stationery expense of 3360 in the trial balance. So stationery is 3360. If I have €720 worth of stationery sitting there at the end of the year, it means not all this 3360 has been used in 2017. Some of it's going to be used in 2018. We only want 2017 stuff in the 2017 accounts. So we need to take that 720 out. So it should be in next year's accounts as an expense, not this year's. So we're going to subtract that from the 3360. And that is 2640. So that's going to be the profit and loss expense for stationery. So P&L is going to go in the admin expenses. So just maybe just a little star beside this or something, just to kind of remind ourselves that that's not what's going in the profit and loss anymore. It should actually be 2640. The other entry then you make, the 720. Okay, so that is stationery that you own at the end of the year. So that is a current asset. So that should go on the balance sheet as a current asset. Working two then. Carriage is to be divided 70% for carriage on sales and 30% on purchases. Okay, so we had a carriage expense in the accounts of 14,400. And they didn't tell us if it was carriage in or carriage out in the question. Okay, this is where they're telling us. So get 70% of that. And that's 10,080. And get 30% of that. 4,320. So 70% for carriage on sales. So that's going to be carriage out. Okay, so that's going to be profit and loss. And be selling and distribution expense. Okay, and the carriage on purchases then also profit and loss. It will go up in the trading account and it will be in cost of sales. All right. Working three then. So most of these workings we end up putting in two different places. So the closing stock, two different places, stationery, two different places. The carriage there was just splitting an expense. So that you know, we don't have to put that 14,400 in twice. It's just splitting something that's already in the trial balance. Same then on the next one. So wages and salaries are to be divided 85% to workers and 15% to drawings. So again, the wages and salaries expense, which is in the accounts, which is 133,200. So I said normally that'd just be in admin expenses, but they're telling me only 85% of this is for workers. So only 85% should go in the admin expenses, and the other 15% then to drawings. So 133,200 multiplied by 85% is 113,220, and the 15% then is 19,980. All right, the 113,220 is profit and loss, and it's going to be an admin expense. The 19,980. So it's drawings, so it's going to go on the balance sheet. Just add it on to the drawings, okay? So we can do that when we do the balance sheet, or you could add it on here, okay, and have a new drawings figure. So two things then. So the 133,200 of the trial balance isn't going to go in as 133,200. So just, you could put working W3 beside it to tell yourself you're going back to working 3, or just an asterisk to remind yourself. And drawings then as well. The drawings are there, they're the 21,600. So as I said, just an asterisk to remind myself, or I could also say it's working 3, or I could add the 21,600 to this here and have my new drawings figure as part of the working if I want. Okay. So we just add to drawings. As a reminder, working for then, so depreciation. So again, an adjustment you're going to see in every single one of these questions. So buildings, 3% of cost. So buildings depreciation. So buildings cost is 600,000. So 600,000 by 3%, so 600,000 by 3% is 18,000, or else 600,000 multiplied by 3, second function, the percentage of the 1, there's 18,000. Okay, where does that 18,000 then go? It is added to accumulated depreciation, which is on the balance sheet up in fixed assets. And the other place it goes is profit and loss. Buildings depreciation would just be an administration expense. The next one then, vans. So vans depreciation. So 15% of cost. So delivery vans at cost is 198,000. Okay, so 3% of cost, I was given the cost kind of here, and that's the book value in the trial balance. With this one here, it's the cost which is recorded in the trial balance. So 198,000 by 15%. So 29,700. And it's the same two places, well, almost the same two places it's going. So it's going to be added on to accumulated depreciation, which is balance sheet fixed asset, and it's also going to go in the profit and loss account. There, we're told here explicitly it's delivery vans, so if it's delivery, that would be selling and distribution expense. Working 5 then. Sorry, no, still working 4. Sorry, not still after the computers. And just be careful here. It's 10% of book value. Okay, so a slightly different way of calculating depreciation. So these first two are on something called a straight line basis. So you're always getting a percentage of the original cost. This one is on book value. So you're getting a percentage of whatever the net book value in the accounts is. So computers and equipment, 32,400 is there. But I've also got accumulated depreciation on computers of 9,000. So the book value will be those two things taken away. Okay, so computers is going to be the 32,400 cost take away the 9,000 depreciation, because that's going to give me my book value, my net book value that was in the last year's accounts. So that's 23,400, and it's 10% of that. So multiply that by 10%, and it's 2,340. Where does that go? Added to accumulated depreciation. So balance sheet, fixed assets, computers, just admin expenses. So profit and loss. Admin. E then, so working E. So I'm on to working 5. So provide for interest on the mortgage at the rate of 8% per annum. Okay, so it's 8% of how much the mortgage is. So the mortgage is here, and it's 162,000. Okay, just be careful there. That 1 May 2017 is important. Okay, we're going to deal with that in a second. But the fact that that mortgage was taken out during the year, it wasn't there at the start of this year, is significant. Okay, but the first thing we'll do is 8% of the mortgage per annum is interest. Okay, so 162,000. So this is mortgage interest. So the 162,000 that we borrowed multiplied by 8%. It's 12,960. So that's a full year's interest on this loan, but we only took it out on the 1st of May. So they can't charge us interest for January, February, March, April, because we didn't have the loan. Okay, we only had the loan for May to December. That's 8 months. So we multiply this by 8 over 12. So 8 months out of 12 months. 8,640. So that's an actual full year's that's the actual 8 months mortgage interest that we should be paying for 2017. Now, you might remember we had mortgage interest, we had loan interest paid in the trial balance. Okay, we had loan interest paid of 7,200. Okay, so we are saying it should be 8,640. But what's in the accounts is 7,200. So we have only actually paid 7,200 in interest, but we should have paid 8,640. All right. So if we subtract those from each other, so what we should have paid, what we did pay, $1,440. So that's mortgage interest that we owe at the end of the year. So that 1,440 needs to go on the balance sheet as a current liability. Okay, so loan interest due. The expense then, which should go in the accounts, is the 8,640 instead of the 7,200. So profit and loss. And then loan interest just kind of goes at the end. Okay, it's just before net profit. So we're not going to put the 7,200 in. So again, just you can put in W5 there to remind yourself to look at working 5, or just something to tell you, don't just put the 7,200 in the accounts. It's 8,640 we put in. All right. Working 6 then, to do with advertising. So where is advertising here? It's 15,840 in the accounts. So advertising was for the year ended the 31st of April 2018. So remember, it's very important that we only put 2017 expenses in the 2017 accounts. If this advertising is for advertising campaigns up to April 18, then there's 4 months advertising included in this 15840 that shouldn't be there. So we need to take them out. Okay, so advertising is 15840. So eight twelfths of that is what should go in the accounts. Okay, and then 4/12 as an expense, and then 4/12 should go on the balance sheet as something for next year. So 15840 multiplied by 8 divided by 12. So that's 10,560. So that's the actual advertising expense in the accounts. So profit and loss, and advertising will be selling and distribution. The 4/12 then, so 5280. So that's an expense that we've paid already, but it's for next year. So that's prepaid, it's paid in advance. So we're going to benefit from that next year. We've already paid it. So that's an asset for us if we've already paid it. So balance sheet, and it would be a current asset. Okay, so prepaid, advertising prepaid is what that would be on the balance sheet. All right. Last adjustment then that we have to make is provision for bad debts. So again, a very standard adjustment that we have to make. So provision for bad debts is to be adjusted to 6% of debtors. So debtors are 50,400. We are saying 6% of those aren't going to pay. All right, so how much is that? So that's 3,024. So that is your provision for bad debts. Okay, so that is going to go on the balance sheet. It's going to go on current assets. You're going to take it away from debtors. So if 6% of your debtors shouldn't pay, or aren't going to pay, you shouldn't put that in your accounts. Okay, so you should take that 6% off if you don't think you're actually going to receive that money. Okay, so you're going to subtract 3,024 from 50,400. You might remember though that there is provision for bad debts already in the accounts. Okay, so the provision which is there is 3,600. So it has gone down. Okay, so that's a good thing. Okay, in the accounts we were saying 3,600 aren't going to pay, but now we're saying only 3,024 aren't going to pay. So just subtract those from each other. So 3,600. So kind of old provision, new provision, and we subtract those from each other. 576, and that is a decrease in the bad debt provision. And a decrease in the bad debt provision is, as I said, a good thing. So that's going to go on the profit and loss, and it's going to go down as other income. Okay, it's a gain to us. Okay, if less people are going to not pay than we thought, so it will be other income. Okay, that's probably, I would say, less common in questions. What's more common is the new provision will be bigger. So say if it was 3,600 and then 4,000, so an increase of 400, that 400 will be an expense, and it will be a selling and distribution expense. Okay, so an increase in the bad debt provision is an expense, a decrease is a gain or other income. Okay, so there's all our workings, and that, as I say, is the second thing we do whenever we do one of these sole trader final account questions.